Hey guys, it's Pilar and welcome back to the channel. This has been a crazy week. Chinese stocks are crashing. Brutal sell-offs continued, wiping out hundreds of billions of dollars in value in Chinese stocks, including that of Alibaba's. Now, if you've been following me for a little while on this channel, then you do know I am heavily invested in the Alibaba stock. Now, altogether, three of China's most valuable companies, Tencent, Meituan, and Alibaba, lost more than $237 billion the first 2 days of trading this week. And crazy enough, the Alibaba stock price we're seeing right now is the same price it was back in the summer of 2018. So is this an opportunity to buy into one of the most undervalued plays in the market, or is it too risky to get into Alibaba right now? Well, my opinion holds very little weight in this matter, so instead I wanted to share with you why some of the legendary value investors such as Charlie Munger, Mohnish Pabrai, and China's own Li Lu, who is considered the Warren Buffett of China, are all buying Alibaba and what their thoughts are on investing in China stocks as a whole. Obviously, these super investors are seeing something more than what the average investor can spot, and they are heavily taking advantage of this market sell-off. And even better news, you can right now buy in on Alibaba stock at an even greater discount than some of these heavyweight investors purchase the stock at. Now, fortunately for us as retail investors, we get to see some of what these super investors purchase in their portfolios and hedge funds through their 13F filings, where they have to disclose what they're holding at a particular time. And if we head over to the Dataroma website, we can see that Alibaba is one of 5 stocks that Charlie Munger recently purchased in the daily journal portfolio, and it makes up almost 18% of the holdings in that portfolio. And the reported price he purchased the stock at was $226.78 per share, making it worth about $37 million in Alibaba shares. Mohnish Pabrai also has a significant holding in Alibaba shares in his Pabrai Investments portfolio, with a reported purchase price of $226.73 per share, making it about 15% of the portfolio's current holdings. Now, just quickly, if you're unaware of what's happening in China right now, well, Chinese regulators are doing a wide range of crackdowns on Chinese tech companies and for-profit education and tutoring companies, with countermeasures ranging from anti-monopoly penalties to data privacy investigations to new rules regarding overseas listings. This includes potentially making changes to the VI structure, which allows overseas U.S. investors such as you and I to buy Alibaba stock. Now, China is a communist country, and public companies are subjected to the rules and regulations of these strict government policies. But policy changes are not the only thing weighing on China stocks right now. Rising tensions between the US and China are increasing the chance that Chinese stocks listed on the US exchanges may become delisted by 2024 if they do not share their audits to the US for review. This does include Alibaba. So with all the mountain risk, why in the world would some of these super investors want to invest in Alibaba and in China stocks in general? Let's listen in to some of Mohnish Pabrai's thoughts on this.
It's an incredible business. Just if you look at Baba and Tencent and kind of where they're at, and the ecosystem and the moat and what they control, and all of that. Look at the tailwinds from China. There's a lot to me to like even more than the large US tech, just because I think that the tailwinds are so much stronger, and there's some serious barriers to entry. It's very cheap. I think Baba is one of the cheapest plays out there.
When do you think the Chinese regulatory issues, do they ever get past those, or do you think that's just part of doing business in China?
I think Alibaba is a crown jewel for China, just like Tencent is a crown jewel for them. So I don't think they will want to do things. These are the plays that have the possibility of global footprints, that they can get there. So I don't think the government is going to take an approach which is going to kill the golden goose, if you will. Mm-hmm. So my take is they've extracted their pound of flesh, and they've sent a pretty clear message who's in charge, and such. So I don't really expect much more than what we've seen already.
So from that interview, we found out that Monish Pabrai thinks Alibaba is one of the best value plays on the market, and that the Chinese government was simply trying to exert its power and show these huge tech companies who's in charge and why they should stay in line with the policies of the government and the thinking of the communist country. Now that we heard from Monish Pabrai, let's take a look at what Charlie Munger has to say about investing in China stocks.
You and your friend Li Lu have been very optimistic with respect to investing opportunities in China. BYD has performed spectacularly for Berkshire since its initial purchase in 2008. It is currently valued at $5.8 billion. The Daily Journal recently bought a large position in Alibaba after founder Jack Ma had been reprimanded by the Chinese Communist Party and Ma's other company, Ant, was not allowed to proceed with its IPO. What are your current thoughts on China and whether the communist leaders will allow businesses with strong leadership to flourish in decades to come?
Well, I think that the Chinese government will allow businesses to flourish. It was one of the most remarkable things that ever happened in the history of the world when a bunch of committed communists just looked at the prosperity of places like Singapore and said, the hell with this, we're not going to stay here in poverty. We're going to copy what works. And they changed communism. They just accepted Adam Smith and added it to their communism. And said, now we have communism with Chinese characteristics, which is China with a free market with a bunch of billionaires and so forth. And they made that shift. They deserve a lot of credit. Warren and I are not quite as good at that as changing our minds in many cases. and that was a remarkable change coming from such a place. And of course, it's worked like gangbusters. It had this enormous growth in the average income of the average Chinese. They've lifted 800 million people out of poverty fast. And there was never anything like it in the history of the world. So my hat is off to the Chinese. And I think they will continue to allow people to make money. They've learned it works. The Chinese, I loved what the guy said in the first place. I don't care whether the cat is black and white as long as it catches mice. That's my kind of talk.
Those were Charlie Munger's remarks on China at the 2021 Berkshire Hathaway annual meeting. As we can see, he believes the Chinese government will continue to allow Chinese businesses to flourish and make money. And to that regard, he believes the risk to reward ratio is a worthwhile one to take when investing in undervalued China stocks. In this next clip, we hear from Li Lu, who is often referred to as the Warren Buffett of China and who is the founder of a multi-billion-dollar investment firm that primarily focuses on long-term investments in China and the US. He is also a close friend to Charlie Munger. Now, while we don't hear him talk directly about Alibaba, we do hear his thoughts on China investments. In this fireside chat, Professor Bruce Greenwald asked, where do you see the unique challenges and opportunities in finding value investment opportunities in China? Here's what Li Lu had to say about that.
So where do you see the unique challenges and opportunities in sort of finding value investment opportunities in China?
Well, China remains, I think, one of the best market if you're a value investor. In a sense, the market is still somewhat underdeveloped. The market today is not as representative as the real economy, the way, for example, the United States is. And so there's a lot of development in that regard. And the trading and the investors are still not as mature. And there's still a mentality of fast trading, high turnovers, which actually renders some of the companies, again, going through a faster pace of this boom and bust. Again, that usually provides opportunities for those mature, patient investors who truly know what they're doing. And also, as you said, the service sector of the economy, when it comes to financial services, is still yet to be developed. And China was really right at the stage when the financial service industry actually is about to take off in a big way for many reasons. And it just so happens also the Chinese government is quite keen in making macroeconomic policies quite conducive for the development of the financial service industry. And they began to open up to the global firms as well in a way they've never done that before. And so all those confluence of factors really make the market that much more attractive today than it was before.
So Lilu sees huge opportunities for value investors in the China market, specifically in the financial services sector. He also mentions that traders in China are not as mature yet as in other developed countries, which makes many of the China stocks highly volatile to hold. But it also allows for huge swings in stock prices, which can present an attractive buying opportunity for patient value investors. We just heard from 3 super investors on their thoughts on Alibaba and in China stocks as a whole. Alibaba is one of the most undervalued plays on the market right now if you can stomach the current high volatility of the stock, as well as the inherent risk involved with the US-China tensions. Personally, I continue to accumulate the Alibaba stock in some of my other portfolios and believe it can reach prices higher than Amazon. Hey guys, please do me a favor and hit that like button on this video before you leave, and I'll see you again in the next one. Take care. Bye-bye.